Think a recession is happening right now? Mainly because the value of cryptocurrencies is plummeting, inflation is rising rapidly, and the stock market is in trouble. Cathie Wood, a famous fund manager, known for betting big on cutting-edge tech companies, recently said that she thinks the recession in the U.S. economy has already begun. Here's her warning to investors. Why she thinks the U.S. economy is in a recession. For an economy to be classified as being in a recession, its GDP must have fallen for 2 consecutive quarters. During this time, businesses and sectors experience a slowdown.
Business been slow.
The actual gross domestic product of the United States fell at an annual rate of 1.4% in the first quarter and 0.9% in the second quarter. She is of the opinion that there may be a slump in the economy all around the world. She brings up the fact that unsettling reports emanate from China and Europe, which she believes may indicate that a recession is about to commence. This is supported by the most current GDP numbers, which reveal a drop of 1.4% in the first quarter of this year. This falls significantly short of our expectations. Given that she is cautioning us, did she provide any suggestions to us about what we should rather put our money into? Actually, sure, she did, and Tesla took up a significant amount of space on the list. In the latter part of the video, we will continue our discussion on Tesla stocks and how they represent the optimal investment choice at this time. There's a plethora of evidence that supports the hypothesis that a recession is on the horizon. When there is high inflation, a pandemic that is still going on, supply chain concerns, and a tremendous lot of geopolitical instability, it is difficult to expand. She also shared her sentiments on the fact that we just started raising interest rates not too long ago and are already debating the possibility of a recession, and how it makes her feel considerably more uneasy about this situation. Although the Federal Reserve has just implemented the largest increase in interest rates in the past 22 years, 50 basis points, the current rate is still somewhere between 0.75 and 1%.
1% of 1%.
At this crucial crossroads, there are multiple possible outcomes, including high inflation as well as a recession. If interest rates were raised substantially, inflationary pressures would undoubtedly ease, but the economy would almost certainly enter a recession as a result. Most recently, Jerome Powell confirmed this, saying they couldn't promise a soft landing, even if inflation is brought back under control. She continued saying it is likely that the U.S. will face even more discontent, which would explain the recent market instability. Talking of instability, our analytics shows that a lot of our viewers aren't subscribing, so why not exempt yourself from this pool by hitting the subscribe button down below? Turn on post notifications as well. How investors should adjust their investments. Cathie Wood contends that despite the possibility of inflation and the state of the economy, the time is right to invest in technologically innovative businesses with the potential for sustained growth. The current sell-off has opened the door to a number of intriguing new opportunities in our industry. If you support Wood's movement, you might be interested in learning about the top 3 investments that ARK has made. Cathie's recommended stocks. Tesla. Investors looking to capitalize on rapid economic expansion have always favored Tesla. Due to its recent price decline, this stock presents an opportunity to trade against the market. There has been a 27% decline in the price of the stock since it peaked on November 4 at $1,229.91. Tasha Keeney, an analyst at ARK, forecasted in April that Tesla's planned robotaxi business line will be a big driver, generating 60% of estimated value and accounting for more than half of predicted EBITDA in 2026. A share of Tesla, according to ARK's analysis of the company's finances, will be worth $4,600 by 2026. Gain suggested is around 400% more than current stock price. Roku is another firm you may not be familiar with, but it has also shown itself to be successful, and will provide you with more information on its stocks in the near future. Keep watching. Everything, however, is running smoothly at the moment. There was a 27% year-over-year rise to 254,695 in total deliveries of the Model S, X, 3, and Y. After acquiring Robotaxi, ARK Invest believes it would be able to significantly impact the industry. As could be expected, Tesla holds the largest interest in ARK, 9.3%. Zoom video conferencing. As a result of the outbreak, traditional meeting locations had to close, which increased the need for alternative meeting spaces online, such as Zoom. There is growing skepticism about the company's growth prospects as the economy improves and more people find work. The price per share of Zoom has decreased by 41% so far this year. Wood, on the other hand, is of the opinion that the share price has further to rise. The fund has an 8.5% position in Zoom, making it the second largest holding in the portfolio. According to research that was published in June by ARK Invest, buyers of Zoom shares could soon benefit from significant price appreciation. The team led by Wood hypothesizes that the share price of Zoom will hit $1,500 by 2026, growing at 76%. These projections are based on data and a model that are open to the public and were built by ARK. This pricing goal implies that Zoom's price will climb by almost 1,200% from its current level, which is approximately $109. Roku. Success stories in the tech industry can be found in the ever-growing demand for on-demand video services, and Roku is just one such company. Following its initial public offering in September 2017, the stock price of the company has increased by more than 200%. The service provides its users with access to a wide variety of the best streaming options. Netflix, Disney+, and YouTube are just some of the services that fall into this category. Furthermore, Roku has its own ad-supported channels that showcase content from a wide range of third-party providers. The total number of the company's active users hit a record high of 63.1 million, up 1.8 million over the previous quarter. Revenue for the year was up 18% to $764 million. Investors are leaving Roku despite the company's rising profitability. During the course of the preceding year, the stock's price dropped dramatically by a whopping 80%. However, ARK Invest believes that Roku presents the greatest possibility for growth. Since Roku owns 7.1% of ARK, it is the third largest investor in the company, behind Google and Microsoft. Cathie Wood and Ark Invest. Cathie Wood's Ark Invest is a multi-billion-dollar investment firm that bets on disruptive new companies including Tesla, Teladoc, and Coinbase. Wood has been a staunch supporter of Elon Musk and Tesla for a long time. She predicted that the value of electric vehicle manufacturers would reach $3 trillion during the next decade. In the year 2020, she became famous for her ability to generate profits despite the pandemic. St. Petersburg, Florida is home to Ark Investment Management LLC, a financial services provider. A number of ETFs fall under their purview of supervision. It has grown steadily since 2014, when Cathie Wood founded the company. The company had influence over more than $50 billion as of February of 2021. The business enterprise known as Ark Invest explores emerging technology for investment prospects. Artificial intelligence, DNA sequencing, CRISPR gene editing, robotics, electric vehicles, energy storage, financial technology, 3D printing, blockchain, and so on are just some of the technologies on the list. The business has invested some money in the Bitcoin market. The organization intends to double its capital over the next 5 years through the purchase of high-growth stocks. From 2014 through 2021, the ARK Innovation ETF returned an annualized 39%, trouncing the S&P 500 by more than 3 times. Thank you for watching.